Black gold has had investors, explorers, and speculators salivating for over a century. These companies have done fantastically well and more recently faced some ESG headwinds. Well, Desert Peak Minerals and their IPO is looking to buck that trend. And in today's video, we talk about the royalties that they have accrued already and all the acres that they control, the bull and the bear case for their equity, and their future expectations. Stay with us.
I'm Hannah, this is Aaron, and you're watching the Piper Rundown. We analyze business and culture to help you win. Please excuse my voice today. I shouted a lot over the weekend. Today's rundown, well, we have a special message, and we want you to build, what is it, Aaron?
A better business brain.
Precisely. That's what you get here on the rundown. We want to expand your mind, build your business brain.
It'll change your life. It'll change your family's life.
Exactly.
It'll change the people you work with's life.
Everyone is better off when you subscribe to this channel and watch the Piper Rundown.
And ring the bell.
Ring that bell, god dang it.
God dang it indeed. Desert Peak Minerals is looking to raise $230 million in an IPO that would value their firm at north of $1.4 billion. Shares of Desert Peak looking to price between $20 and $23. That has already had one upward correction while they're on their roadshow, continuing to look like the higher end of the range at present. What is Desert Peak Minerals, you might ask? Hannah, let me tell you.
I was just gonna ask, Aaron.
Desert Peak Minerals is a company that acquires the mineral and royalty interests in land, most of that land being situated in western Texas.
Ain't that something?
99% of it, in fact. They've been doing it in this form since 2016 with operations out of both Denver, Colorado and New York. But prior to starting Desert Peak Minerals, the exact same management team that is running Desert Peak was leading the PE firm Kinneridge Energy Management, which was founded in 2012. So basically what they ascertained was they raised a round, they went out and purchased mineral rights on behalf of their clients in a private equity vehicle. And what they decided was if we were able to put this under the banner of our own company and be the entity that owns the long-term rights to these minerals, otherwise said as oil and natural gas underneath the ground in this land around West Texas, then we would have a higher capacity to get a return on the total market cap of that vehicle via something like an IPO. So that's what they've done. They have raised considerable amount of debt in addition to some initial kind of seed capital in order to facilitate the acquisition of this land. So if you're trying to picture what's going on here, they have a team of engineers, surveyors that have, at least to some degree, a conception of what different mineral resources and oil and energy resources are underneath the ground. They then go around to the land that is not already accounted for on some other mineral rights balance sheet and make an offer to that landowner. The proposition looks like this. Hey landowner, you don't know if or when someone might actually come to your land and drill everything that's under the ground. You might want capital now, or you might want your cash flows, your assets to be diversified out of oil and natural gas. There's some secular headwinds there. Let us take that off your hands. We will give you cash now or some sort of upfront cash advance. And in exchange for that, we will retain the long-term or maybe a 5-year, 10-year license to the rights of that which is under the land. What they'll go then around and do is proposition for the large oil and gas companies that actually run the drills to go show up and start to suck that stuff out of the ground. What they have accumulated since their inception just 5 years ago, 75,000 net royalty acres that already have 5,000 wells operating on those said acres, 99% of which is located in West Texas. This has been acquired through 177 acquisitions, something that they've been ramping up slowly since 2016. 14 of those 177 acquisitions account for 85% of the volume that's taken out of the ground. So still power laws, still 80-20 principle here. And all of this is connected to the Permian Basin. This is one of the large reservoirs that is under the ground around the United States. You've got the Bakken up in the South Dakota region. You've got the Permian in Texas. Permian has been around for a very long time. There will be blood with Daniel Day-Lewis, based off of oil speculation in the Permian Basin way back in the day. They have been actually not able to quite ramp up revenue in a linear pattern because we had a crazy commodity year back in 2020. 2019, $59 million worth of revenue, only $43 million worth of revenue in 2020, and $36 million worth of revenue in the first 6 months of 2021. So definitely a rebound. If you'll remember, Hannah, do you remember what happened in early 2020 when everything got locked down, shut down because of the pandemic?
Yeah, a lot of oil companies got cut off.
Oil crashed. It actually went into a negative price because of the way that options and futures contracts work for oil. You have to actually take physical delivery when a contract expires. And because no one was driving their cars around, the rate of oil consumption fell precipitously. Instead of people speculating on the price going up, where there being a demand for the supply of oil, there was no demand, so supply had to find an endpoint, and they were running out of actual reservoirs with which to hold the oil that was being taken out of the ground. What happened across the world was natural gas and other pumps were actually shut off, which is what has been the primary cause of the rebound into really high gas prices like you might be seeing at the pump now, because the oil rig is not like the light switch in your house. You turn it off, you turn it on, and stuff starts flowing. There's a much more arduous process to get that out of the ground. So what Desert Peak has seen was a loss in capital. They made $8 million in 2019, lost $14 million in 2020, and made $9 million in net income so far here in the first 6 months of 2021. They were one of the folks that, you know, if you're getting a royalty on the cubic foot of natural gas that's taken out of the ground, or the barrel of oil that's taken out of the ground, when that pumping stops and the price of the commodity drops, you're not going to be able to make quite so much money.
Definitely not.
To give you a framework for what their assets look like, 79% of their revenue in 2020 came from crude oil, 10% from natural gas, and 11% from natural gas liquids, which these days are made and used for a lot of plastics and other down the line deliverables. Last point here before we get into the comps, Hannah, their credit facility that they have locked down is a $750 million rotating credit facility with an interest rate below 4%. So what that means is they are able to borrow money at a very, very cheap rate, similar, maybe even less than what you could probably go and get a mortgage for. And with that money, they can go make that upfront offer to the landowner for those rights, and then know that if they're able to return more than 3% on capital used to buy the thing, they actually have a spread that they're making on the capital that they're loaning, and they're never using that whole 750. I think right now it's a little over $100 million for the credit facility that's actually in use. It does speak to the auditors and the underwriters at the bank issuing that credit facility, given their perspective on the viability of this business model.
Definitely. This is one of those businesses that, like, never in a million years would I think that I'd be covering something like this on a business show, because it's so unsexy. It's not something that people look to necessarily as like, oh, this is a good business to start to be involved with, but it like has to happen.
It's opaque. There's a lot of layers to even being able to execute on something like that. And unless you've got family or someone close to you in energy, in oil and gas, it's never going to be talked about that this type of business exists.
Totally. Fascinating stuff. That's what you get here on the Piper Rundown. Don't find this shit every day. All right, on to the comps section. In order to better understand any business that you're looking to invest in, it is very helpful to get a feel for the surrounding business landscape that is looking at comparable companies as well as competitors in the space. Aaron, tell us about the comps.
Well, we're about to contradict ourselves. We talked about how rare it is to come across a business like Desert Peak Minerals. There's actually a bunch of other companies that do something similar, 3 of which are Viper Energy Partners with a $1.4 billion market cap, Blackstone Minerals with a $2.6 billion market cap, and Prairie Sky Royalty with their $2.7 billion market cap. To give you a sense of relativity, Viper Energy Partners, with a similar market cap to what Desert Peak is looking at, only has 24,000 net acres of royalty, but that is being drilled at a higher rate, so they have more cash flow coming in the short to medium term. 2 big points here. All of these companies partially what you're betting on is not just the land that has already been licensed that they have access to. You are to some degree betting on the capacity of this management team to make astute investments into the future and continue to deploy capital in a way that behooves you. Not quite the same, but we talked about the collection of teenage clothing brands and their capacity to acquire the next hip brand and nurture it and turn it into a healthy business. You are always making a management bet when you buy an equity like this. To compare to something else, there's a different style of investing in these royalties where it is a trust. In one of the classic examples, same general vicinity of the world, the Permian Basin Royalty Trust, which is a $360 million market cap. This is something that is no longer actively being invested and managed the way one of these licensing firms is. There are set parcels of land. Someone who has, one of the entities that has owned this land in the past wants to diversify, wants to maybe get some liquidity out of their holdings in their land in the basin and put it into something else. So they put shares of the Permian Basin Royalty Trust on the market. Other people were able to buy into those future royalties, but there's not the same dynamism of an actual management team who are also taking their fee, some different costs there. The Permian Basin has a lower cost model, but does not have the same type of growth upside that one of these could potentially have.
Yeah, makes sense. On to the meme factor. If you're unfamiliar with the meme factor here on the rundown, it is where Aaron and I rank the memeability of a company on a scale from 1 to 5. 1 being negative memes, 3 is completely neutral, and 5 is all the positive dank memes. We mentioned before that this is not a super sexy business. That said, another factor that plays into the meme factor here that we talk about occasionally is the name. And I think Desert Peak Minerals is a pretty great name for what the company actually is. You mentioned Blackstone in the comp section, also top notch, but like within the industry, good branding. I don't know. I think I'm going 3.3 for Desert Peak Minerals.
I'm going 2.1.
Okay.
The reason is that although it's certainly not always rational, there is a degree to which ESG, environmentally factors either create headwinds or tailwinds against companies like this. And, we talk about Tesla being one of the high end of the meme factor type of score companies, despite the fact that all the batteries that they're selling and that they put in their vehicles are rare earths mined out of the ground, which is a horrible, dirty process and certainly not environmentally friendly by any stretch of the imagination, but they get the environmental pixie dust sprinkled all over them. Meanwhile, classic natural gas and crude oil is not getting any ESG favorability these days, and many people are trying to diversify out of those types of energy sectors. So I think that's a general headwind where there's a whole bunch of people that put on the ESG cap that wouldn't even consider participating in something like this in some way, shape, or form, which does create a little bit of a draft in the face.
Makes sense. On to the bull and the bear case. Aaron, where do you stand?
I stand on we're great and you should subscribe if you haven't already. But the other part of my analysis starts with this is a scalable high margin business. We like B2B SaaS because once it has been implemented, there is a fantastic high margin ability to execute over a long period of time. Royalties are in the same class of high margin. This company is not operating rigs. They're not owning heavy equipment.
Right.
They can have a relatively short back office and lineup of talent actually going out and executing these acquisition plans.
Yeah.
In the spectrum of $1 to $1.4 billion companies, I would have to guess that they were on the lower end of total employees actually executing against this
Definitely.
strategy.
It seems like a high efficiency type of company in that regard.
Certainly. The second point here, and there's been some really good Goldman analysis over the last year about the beginnings of a commodity super cycle for a whole mess of different factors. Supply chain challenges, monetary policy, a number of things that we won't get into in this video. But if you buy the narrative that we are in the earlier innings still of a commodity super cycle, then a management firm that is acquiring royalties in one of the highest demand commodities is a great position to be in.
Definitely.
On the bear side, the ESG thing is real, And that precludes some collection of investors in ever participating in a company like this. I don't care what sprinkles they throw on it. It is not going to be palatable to certain boards and certain investing mandates that some institutions face. And the reality is that when we are participating in a market, we are participating in a complex matrix of buyers and sellers. And if you take an entire population and move them into never a buyer category, it puts a ceiling on what a price can be. It does not matter what the underlying basis is, what the future cash flows are, when the nature of the market itself is creating a force against that. I think that's the strongest argument against Desert Peak Minerals. It does not necessarily mean that I would be sitting on the sidelines personally from a proposition like this. But the other part, and this isn't even so much of a bear case, this is more of a put your own antenna up, think for yourself, understand your position before you make a play, is I referenced all these other similar royalty companies, many of them also operating in the Permian Basin, Viper Energy Partners also in the Permian Basin. Do you have the willingness to go now, after a video like this, put in the work and ascertain which of these companies you actually want to participate in? Do you just want Desert Peak because they're IPOing? Yeah. Is there one that's already on the market that could have a more palatable dividend policy, risk profile, given the exact square acreage that they are actually in control of? I'm not sophisticated enough. I'm not an oil man. I can't actually give you an evaluation of that. And if you're not capable of doing that for yourself, tread carefully before getting into this space.
Wise words from Aaron Watson. That is the Piper Rundown. Thank you for watching. We'd like to shout out one of our most recent commenters from a past video. Star Buccaneers commented on our Allbirds IPO video. Great video. Enjoy your guys' analysis very much. Really nice info. Well, thank you very much, Star Buccaneers. That is what we try to provide, is analysis that is easy to comprehend for you, for your friends, for your family. And we hope that you enjoyed this rundown. Make sure you hit subscribe if you haven't. Thanks for watching.